here, and boy, watching a wild weekend in all manner. This, as you can see if you're watching and seeing my screen, the S&P 500, that's the Friday rally, 230 points. The Dow, 1,985 points. NASDAQ, 673 points to the upside. So that's what we were looking at on Friday, folks. And as various inputs into how the coronavirus is spreading or COVID-19 is spreading, we're seeing more and more reaction, not just from cities, like for instance the city I'm in right now, Chicago. They have just announced that they're going to close restaurants tomorrow. In other words, tonight is the last night out in restaurants for some period of time. They haven't told us if it's 2 weeks or if it's longer than that or shorter than that, but that's where that is right now. And they're doing almost everything in their power to keep people from congregating in groups, because if you've seen any of those matchstick examples of how it jumps from matchstick to matchstick until somebody steps away and then it stops, well, that's one of the issues that they're worried about, is that not enough of us are stepping away, that so-called social distancing. So with all this as the backdrop, the Fed cut interest rates to 0. And I think anybody listening here on Twitter right now knows that this is a very dramatic move, a move that the Fed, a 100 basis point cut like this, that's pretty darn dramatic. And the Fed has done that, and just an hour later, we're seeing the beginnings of trade. So for instance, the screen you're looking at, that was Friday's screen. Let me pop up where we are here right now. Go to my good friends over at CNBC. Maybe enlarge this one a little bit too. But this right now, that NASDAQ is down 359. S&P futures are down 128.50. Dow futures down 1,041. So as you see clearly right there on the screen, stock futures dropped and hit limit down even as the Fed slashed rates, even as they committed $700 billion more to the markets. And so that's what we're going to be talking about in our webinar tomorrow. This is a free webinar, by the way, folks. All of these that we've done have been free webinars. So for instance, here is the link. It is just marketrebellion.com/Fed0. And I'm spelling zero, Z-E-R-O. I'm not putting the number. So that's marketrebellion.com/Fed0. You can register for free, and that live stream will begin at 4 p.m. Eastern Time tomorrow. That will be bringing you myself, my brother Pete, Mike Yamamoto, Ryan Mastro, Brian McCormick. These are all of our key traders and educators, folks, that are available for this webinar. Again, free webinar. It'll probably go somewhere between 35 minutes and an hour, and it will be repeated as well. We will put it up as well after, but if you'd like to see the live stream, then you can sign up. All you need to do is sign up with name and email address. No credit cards, no nothing. This is not a bait and switch. This is going to be great information from my brother Pete, what kind of trades he's putting on to trade this volatility, what Mike Yamamoto, Brian Mastro, and Brian McCormick, these are guys that are constantly posting into our unusual activity blog, and great traders. And by the way, I'm going to be showing you a graph in a second that Brian McCormick rather sent over to me just a little bit ago. But again, to emphasize, stock futures, we did hit a limit down after those rate cuts, central bank actions, responding to what they perceive as what's necessary to keep not just the exchanges, but to keep the economy functioning. You already know that the markets will have to deal with not having traders on the floor of the Chicago Mercantile Exchange. The CME Group shut their doors on Friday to traders after the bell. So did the Chicago Board Option Exchange. So one of the things I worry about a little in that regard is the volatility we've seen, of course, has been very high. But now, without traders in the mix, without those intermediaries, a lot of folks that wanted this all electronic market, they'll get what they wanted, because in the case of the CME, it'll all be on Globex and there will not be floor trading. And that makes certain types of spreads much more difficult to get out to the whole group that might be interested buyers and sellers of any certain quantity of trade. So again, the Fed cut interest rates to zero, slamming them down to the lowest level since 2015. And the central bank also put in $700 billion of quantitative easing. So that, the more we can coordinate those sorts of moves with central banks around the world, the better it would be for us, folks. But nonetheless, with that biggest one-day gain since 2008, that 9% surge, and again, I'll pop that one up for you. That was Friday's number, 9.25% surge in the S&P. We're about 100 points less than that right now as far as loss. We're down about 128 points in the S&P 500 futures, and we're keeping an eye on that and keeping an eye on exactly how the NASDAQ and Dow futures will be trading as well. But more than 156,000 cases around the world have been confirmed. This is data from that Johns Hopkins University survey that basically is second by second. And 2,900 people in the United States have been infected. The death toll in the United States is 57. So we're seeing pretty extraordinary moves made by the Fed officials here, and cutting rates all the way to zero. Again, something I think that was something they felt they had to pass the ball over to Congress and the president as far as fiscal. They've done virtually everything they can with monetary. Now they could do like Japan, they could slide it over and start purchasing stocks and things like that, but I don't really think that's what the Fed wants to do or what many of us think the Fed should do. But this graph you see on your screen right now, folks, that is a graph that Brian McCormick was nice enough to shoot over to me. And this is one when we did our live trading down in Florida just a week ago. We were talking about this as the potential zone for where we'd anticipate that we could get to on this downward move. Brian called that, so hats off to you, Brian. And now that we've gotten down to it, you see that just this is against a long-term line right here, and we're going to have to see if we can hold at those levels exactly how resilient the market will be. So once again, folks, we will be doing a live webinar tomorrow. That webinar will be from our headquarters in Miami, Chicago, and up in Portland, Oregon, and Las Vegas, Nevada, but it'll all be online. So all of those educators, I guess I got to throw my brother Pete in there too from Minneapolis. We will be coming to you at 4 p.m. Eastern Time tomorrow, and in order to register, all you have to do is go over to marketrebellion.com Fed0 to register. That's marketrebellion.com Fed0, and you'll be able to register for this event. I think it'll be fabulous because you'll get a lot of some of the best minds in derivative trades where they would be putting on a spread right now, for instance. The best opportunities that we see based on volatility, which had a historic move over this past week, up and down. We're going to keep those as our focus, and that will be at 4 p.m. Eastern Time tomorrow, Monday, March 16th. And all you need to do is register. Go to marketrebellion.com/Fed0 to register, and we'll see you tomorrow at about 4 o'clock. Thank you very much, folks. I hope you have a great rest of your evening.